Okay, welcome to today's session. Obadiah, how are you doing? You couldn't join yesterday, right? Obadiah, how are you? You couldn't join yesterday?
Yeah. I went to preach somewhere. So when I came, you people were done.
Oh, okay. This is second. I thought it's Obadiah.
Oh, okay.
Okay, that's all right. I hope all is well, sir.
Perfectly fine, sir.
Okay, okay. So we are still on. Every day we are trying to learn new things, or get more deeper understanding of what we know already, um, and also keep studying the chart and be looking at how how the market is always playing out or the market is always behaving, because that's part of the process. Being able to stay and then always looking at what is happening on the chart, and then how your setups and performing so that you can modify or you can stick to the best approach, especially the entries. One of the important things about trading is the entry, okay? Because everything is about entry. What is, if you get a good entry, you'll be okay, right? So entry and also confirmation, entry and confirmation, okay? Confirmation that the the pair you are trading is going to go to this direction or that direction. These are very important things. So we keep learning to perfect all these things. Um, so throughout from last Sunday, we've been studying about three things that will help us to be able to understand the market and to frame trades. So quickly, I want to walk through them again, and then we see how we will be able to apply these things to your specific pairs. I ask that everyone chooses one or two pairs that you are interested in so that we can study with the three steps that we've learned so far. So, step one is to establish who is in domination. To establish who is in domination, we learned that we must understand what the trend is. To be able to establish the trend of the market, and we learned that there could be an uptrend, which is a bullish market, a downtrend, which could be a bearish market, and there could be consolidation at any given season or session or time of trading. So, for us to be able to understand the trend, we need to know how the market moves, the footprints that the market leaves as price is moving from one point to the other or one level to the other. For example, if the price of gold is $2,000, if gold is going to move from $2,000 to $2,500, how is that movement going to look like? What are the characteristics? What are the prints? So we understood that the market will make high points and low points always. And there are four important points that we can think of. Higher high point, lower high point in terms of a bullish market. So a bullish market or an uptrend is going to have higher highs and lower highs dominating. And a bearish market is going to have lower lows and lower highs dominating, and that will be the trend, would tell us the trend. And we also said that for you to understand the trend of the market, it's important you start viewing the market from the top down, from the higher time frame, and streaming it down to the lower time frames. And if you are able to get about a minimum of 3 to 4 time frames aligning with the trend you are finding, then that can be a good start. So, for example, you can have the weekly time frame giving you a bullish market, which means you have higher highs, lower highs dominating, and you can have a daily time frame giving you the same thing, 4 hour time frame giving you the same thing, and maybe 30 minutes, 1 hour can also give you the same thing. And this could be a good start for you to get in to know who is in domination of the market. So you first have to do that. And at the heart of establishing the dominate who is in domination is to understand price action itself in terms of market structure. So what is the structure of the market? Okay. So the pairs that you choose today, we are going to study the structure of the market, the basic structure, because the market operates based on the structure, the basic principle that the market operates on. One of them is structure. Structure cannot be bypassed in the market. Market will always respect structure. Okay, it will always respect the higher highs, lower lows, lower highs. It will always respect that. Okay, so it's important we have to understand structure. Um, then step two, we said that you will need to, or we will need to define an area of interest after establishing the trend or who is in domination. We have to establish the um, area of interest or find an area of interest. To do this, we must understand that if we have the trend, then it means we can find the most important or current range, which means that for example, in an uptrend, you should be able to find or draw the most current lower high and the higher high. These 2 points will become your range. So you first have to establish within this range what is your discount zone and your premium zone. So if you are able to establish this for a bullish, if you're expecting to buy, you would want to look for your area of interest around the discount zone. Okay. Then some of the concepts that basic concept that is easy to understand or simple to understand in terms of establishing your area of interest is to look for either demand supply, okay, areas or zones inside your discount or premium or support resistance. Okay, so for support resistance, we introduce ourselves to the concept called precision support resistance, which is shortened as PSR. The PSR is the price level or exact price um, level where the market is using that level as both for buying energy and selling energy. In other words, the market uses that area as both support and resistance. Okay, so you should be able to find an area or a level of price within your discount or premium zone that the market is utilizing as both support and resistance. Support means that the buyers will be active around at that level. Okay. And if the buyers become weak or the buyers become disabled or discredited, then the same level will be used as a resistance for the markets, for sellers to step into the market. And we will look at this again on the chart today too. Okay. So this some of the few things we discuss about area of interest. And I use a simple analogy of buyers and sellers as the way they react in the market. So anywhere you see the market price reaches and there is either a push down or a push to the upside, means that it's either buyers or sellers are there. Okay, so if you understand it in this simple form, it becomes quite easier for you to know what is happening. The third step is to find your entry, but you need a signal or confirmation before you click on buy and sell. And to do this, we learned that at your area of interest, you might want to see an initiation or indication or intention. Okay, you must see an intent, okay, for the market to go to the direction that you are aiming or you are expecting. Without that initiation or intention, you can't. Okay, so you must see an initiation or intention or indication, and you must see some kind of a correction or a pullback. Then you will now go in for either your trade, either for the continuation or for the reversal. Um, then we also mentioned or learned that before you take your trade, you must make sure you see um, either a morning star pattern or an evening star. So we said evening star is for bearish reversals or when the sellers want to take charge. Okay, when buyers are in charge and sellers want to now step in or take charge, normally they will give us the market will form an evening star pattern. An evening star pattern is when there is a bullish candle and there is an indecision or a doji candle at the top of it, and then there is a bearish engulfing or a bearish candle that sweeps the doji, and that can give us a pattern that looks like a high, higher high, and then a lower high for in terms of a bearish pattern, evening star. For morning star, you will have something like a bearish candle, then a doji or an indecision candle, and then a bullish engulfing candle. Okay, at the bottom of the chart, when price is selling, then you have that pattern. Three candles will form that pattern, and it's going to give you something like a low, lower low, and then a lower high. Okay, so you it's important to find such patterns in your area of interest. Okay, that is going to help a lot to get the confirmation. Then you also need to see rejection, okay, or engulfing candle or engulfing activity. Rejection is, let's say the market is moving up and then quickly the thing starts going down. So let's say you are monitoring the 30 minutes candle. Then the candle will have flesh like body on it, pushing up, pushing up. Then all of a sudden you see the thing is dropping, and the candle that had flesh or body on it, now you will see like a line or a shadow, okay, or a wick. Okay, then it will be all the body will be shrinking down, shrinking down, shrinking down. That activity is what we call rejection. Okay, so you must see rejection. If the market is going up and it start rejecting, it means that there are sellers up there who don't want the market to go above them. So they are pressing it down. The buyers are pushing it up and the sellers are rejecting it. The same thing applies. Sellers could be pushing the market down and then buyers will also be rejecting it up. You might want to see such an activity in your area of interest, no matter the time frame you are using. Then after that, you might also want to see an engulfing activity or candle. Engulfing means buyers, let's say sellers push a 30-minute candle up and the candle closes with a body. Then you see another candle, new 30-minute candle open, makes a little bit of wake up, rejection up, or even does not make a wake up at all. Then it will start dropping, pushing down with a body, and it will keep pushing down till it engulfs the whole of the previous bullish candle maybe half of it, 70% of it, or even everything. That is what we call engulfing activity. So, and we have seen all these on the real chart. I'm just trying to go through all this by ways. Okay. Then you might want to also look for a pattern called the head and the shoulder pattern. This is the pattern I love so much. That's why I'm introducing it. There are two basic patterns that can cause the market to turn back to the opposite direction or reverse. For example, let's say the market has been buying, buying, buying. For the market to start selling, you might it's either the market will form a head and a shoulder pattern, or it might give you a double top or triple top. So this is very, very, very important. It's important for you to train your eye to see such a pattern, okay, and to be able to know how to trade it. Okay, so in your area of interest, it's important to also look for a head and a shoulder pattern. Okay, and head and a shoulder pattern can both be used for continuation market and reversal market or reversal setups, even though the head and a shoulder is a reversal pattern. So after looking for all these things, once you see that there is initiation or there is momentum at your area of interest, you might want to monitor the your PSR, which is the precision support resistance, and see that as long as price stays above it, you will be buying, and as long as price stays below it, it's either you're not going to be interested in the trade, or if it's a bearish a sell setup, then you'll be selling, right? So, and one important thing, you must always allow your trade to play out, and you must always decide how much money you are willing to lose on each or on every trade, so that if the market is just moving against you, you don't just close. So you must decide, okay, I want to lose $5, or I want to lose $10. Okay, so that should guide you rather than the moment you see a 1 minute candle pushing down against your 5 minute candle, then you are afraid. Then you just close the trade. After closing, then the thing will now move up and leave you behind. Okay, so this is just me trying to go through all we've learned about the three steps very quickly. And so let's now go to the chart and look at specific examples by applying these three steps real quick. So, how many people do we have right now? I expect everyone to have a pair. I expect all of you to have like one pair that you suggest so that we look at. And there are some of the pairs I've been already using them for our lessons. So don't bring the same pairs. Okay, I've used Euro USD for our lesson. I've used GBP USD. I've used BTC yesterday, and I've used gold. So don't bring those pairs. Bring different pairs. Even if those pairs are the ones you love, just give us a different pair so that we can apply the three steps on them. But before we move on, before I ask you to give me the pairs one by one, I want to take a little the time left for this session to go through the dollar index. Okay, the dollar index is also called DXY. Okay, and that is the index that measures the performance of the dollar. And that is very important or critical for the whole forex market. In fact, whatever happens in the forex market is being decided by the dollar index. If the dollar index is trending, all pairs will have the freedom to trend. If the dollar index is ranging, the market will be choppy. Okay, it will not be giving us better price action. So the dollar index is very important. So I want to myself use these three steps to help us to understand the dollar index real quick within the next 5-10 minutes. Then in the next session, I will invite all of you to give the pairs, then we can still apply the concept or the steps to them. Any questions up to this end? Any question up to this end? Any question up to this end? And this is yesterday our BTC setup. So this is the BTC anticipation we made. We said that buyers were active at this level, and so we're anticipating buyers to step into the market. And we said that we were able to predict or anticipate that if the market is going to buy, it has to break above this level because sellers are very active at this level. This is the 15 minutes chart. So exactly the buyers were able to take control. Look at where I put the line. Price went above and the buyers step in. They were able to push the market up. It got to where the sellers were exactly, and the sellers were able to take control and they pushed the market back down. Okay, so if you look here, this is a new level that I marked today. This level, you could see that where I'm putting this rectangle, this place looks like sellers are sitting here. Why am I saying sellers are sitting here? Because exactly at this point, there is a reaction here to the downside. Okay, and when price came up, um, the market was able to go above it, and the market dropped back to the same place and it pushed up, meaning that buyers buyers took over when the market was able to go above this level. So this qualifies this area as being used as both resistance and support. So when the market now came back again later, it came back again, it was able to um, impulsively sweep or close body below this area. So the market now pulled back into this same level or area where the sellers were sitting before, and the sellers were able to take control over there again, and they are pushing the market down. You see, so this is how you can find your PSR. Okay, this is a quick example or of finding an internal PSR. Okay, internal PSR, an area or a point that is being used as both support and resistance. Okay, and I'll go into it. I'll go into it more as we go on. So right now, from the way it is, this setup has been fulfilled. Okay, I already made the profit. I closed all the trade already. The moment I saw price drop down and it wasn't able to go above here, I closed all the trades and we made some profit today already. So in the future, if price is to move from down here and come up and close body impulsively above this level, I am going to use it as a buy confirmation and jump on the buy. But for now, sellers are in charge. Okay. So all the setup that we were trying to frame, we got the play we wanted, and sellers are now in charge. Okay. So we don't have any bullish bias on BTC right now. Um, so move quick. Let me move quick. I'll come to gold later, but let's go back quick to the dollar index. So I'll start from the daily time frame on dollar index and then just look at the most important information that we can have. So this is the dollar index on daily time frame. What do you guys see? So from what I see right now, okay, from what I see on the dollar index, um, if I'm using, okay, so where should I use? Um, the dollar index right now, the current information that we have. Okay, let me use the weekly time frame first to view it well. So that's what it's important to be viewing the market from the higher time frames, okay? Um, so if I look at the market from the higher time frame, weekly time frame, and let me look at the monthly time frame also to get a better view of everything. So this is 1 month time frame. Okay, so I zoom it out. I can see, okay, so this is the way the chart looks. So first, I can see there is a high point here. Okay, the market makes it has a highest point there, and the market has a lowest point below somewhere here. Can you all see that? Are you guys seeing my screen? Can you see that?
Yes, sir. Yes, sir.
Okay, good.
Yes, sir.
Yeah.
We are
Good.
seeing that.
So with the current information that I have, let me just use what I see. Okay. Um, I can see that from this high here, the market came down, takes a previous low, which is this area. Okay, there is a previous low here. So from this high, the markets dropped down to take that previous low and made this low. Then it pulled back up and make a lower low. Then it pulls back down and it makes a lower high and makes a lower low. Okay, because this low took out this previous low. Then it pulls back up again and makes um, another lower high. This is a lower high because the last lower important lower high was here. And this move was pulled back up, but has not been able to take out this high. And now we can see the market is kind of dropping. Okay. So for that sake, I would say that this is a lower high. So the most current lower high is here. Okay. So if we look at the market from this angle alone, what do you think is the trend if you have something like this? Okay. So we have
Trend.
lower low, lower high, lower low, and lower high. So what do you think is a trend?
Downtrend.
Who is in domination? Sellers looks like
Sellers.
sellers are in domination now from just what we are using. Okay, so if we take the last reference lower high, for example, if we take this point, because this was the most current lower high before we are now getting this one, this place. Okay, so if we take this area, this is an important reference lower high or reference high because it was able to take out a previous low, okay, and made a new lower low here. Okay, so based on that, we have the right, or we can say that this high here, from this high point to this low point, can become a range, okay, a swing range. And when in a bearish market, you measure the range like this and you look for the premium and discount. So discount is anything below 50%, and then premium is anything above 50%. So for if you are looking to sell for a bearish market, we will look for price at premium. Okay. We will look for price at premium. So where did price go up to hit right now? I can see 78.6%, broke it a little bit, dropped down to 61.8, went back to 78 and dropped down, and is currently reacted with 50%, and it pulled up a little bit and currently consolidating around this area. Okay, so one, according to this current monthly time frame range that we are using based on the trend or the bearish domination we are seeing on this chart, we can see that price is back into premium. So this is a good place for us to look for sales. So what we will do is to be able to look at the current information around this area and see if we can see within the smaller time frame, we can see bearish trend or a bearish structure also forming here. Do you guys get my point? We must be able to see that sellers are also in domination inside this premium zone so that we will be sure that we can sell. Okay, so that is what we have to also do. Price is in premium, okay, but we have to still make sure that there is a bearish domination. Sellers are in domination based on the structure before we can get to the next step of finding area of interest. But prior to price getting to the premium zone there, from down here, we can see price has been bullish. Okay, why is it bullish? So this bullish movement is like, for me, it will look like a pullback. Okay, the pullback will be bullish. So the main trend looks like bearish, but the current pullback we are seeing is a bullish trend. So we can see a high, a lower low, a higher high, lower low, a higher high, and currently we have a lower low. Okay, so where do we need price to be in order for us to say that the trend has changed from bullish to bearish? Okay, if you have this trend, a trend like this, where do you need price to get to before you can say this bullish trend has changed to be bearish? So, like I said, you monitor in a bullish trend, higher high, lower high, higher high, lower high, higher high, it made another lower high. Okay. So first you will need um the last important lower high. This area is the last lower high, and that made a higher high. You need this lower high to be invalidated, to be attacked, to be taken out. Price must crash this place. When this happens, then you know you are really, 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 really going to be bearish. Okay. This changes the direction. And then you will have to now expect price to pull back up for correction. And then you might want to now sell. Okay. Look for sales. Okay. So this is ideally what we should see on this weekly, monthly time frame, which means that we need price to, which means we need price to come down and break this level of bias or support. Okay. Why? Because this level is the last low that has given us the highest point. Can you see that? Can you all see that? This is the last lower high. Okay, this when price came here and it moved here, this did not give us a new high. This was just an equal high. Okay, but then it pulled down here again and started moving up again from here. From here, we now got this high. So this area is the last lower high that has given us the higher high. Okay, are you seeing that? Are you all seeing that?
Yes, sir.
So we need price to drop to be able to drop down to crash this place, to crash this place. And that is going to mean we have a break of structure or a change from this bullish market to now a bearish market. Then we will expect a pullback, then we find sales. Do you all get the structure? This is the way it's supposed to be. Okay. So this is what we have to be looking for. But before that happens, Inside this 78.6%, 6150 zone here, up here, we can still be able to study this area and see if we can have an early entry even before price drops down to break structure. Okay, we can have internal structures being formed, berry structure here, even before price drop down to break the external structure. So we have to now study what is happening at the top here to see if sellers are also in control. Because if price does not close below this area, buyers are still in control. Though we are in premium zone, buyers are still in charge. Okay, so we have to look at what is happening there. So to do that, I would want us to move to the lower time frame, which is daily time frame. Okay, so we go to the daily time frame and then we see what is happening. So in the daily time frame, we can see that from this below here, price has been bullish. Okay, so let's study the specific higher highs. Okay, so let's study as price was moving up. So watch here carefully. Okay, we can see that we can see this is the highest point. We can see on the daily time frame, this is an important higher point. This is a low point. Okay, so you can see price was making higher high, lower high, higher high, lower high, higher high, but this is a small move up pullback, though it is still relevant, but higher high. um so I will push it up rather, higher high, and then price drops down to break this area. So within these internal structures on the daily time frame, if I'm using this area as an important reference, lower high here, price from the top has dropped to take this low out. Okay, so once it dropped to break it up, we can call this move a break of structure or an intention to change direction internally. Okay, so once something like this happens, what you would expect is the price does not need to price shouldn't go up to take the all-time high out. The moment price breaks structure like this and it goes up again to take the highest point out, it means the intention to change direction has has been invalidated. Okay, it wouldn't make sense again. So if price breaks structure like this and it does not go up to take the higher high out, you will be good. So we see we break structure here. In fact, then price drops down, then breaks another structure. You can see this low point. Price break this low, move up, drop down, okay, and break this area also, these lows here. So this means that we are starting to see lower lows and higher highs. So sorry, lower lows and lower highs. But at the end of the day, we see price is making something like just a second. We see a low, one low, and then we see a lower high, failing to go up to take out this high. Okay, so this is the lower high. Now from this lower high, this was the lower low. Price drops down